If you think earning money is the only way to become rich, then you are wrong. If this is your perception about money, then dear viewer, you're in a big trouble. If you want to learn how do you become a billionaire or millionaire, then you have to stick with us till the end of the video. And if you wish to skip any part of it, then it will be a loss for you. And we wouldn't suggest to do so, as you have already been running a loss. If you know what I mean, not everyone is born with a silver spoon in their mouth. You might have seen people becoming a star from scratch when it comes to money. Their secret is what you're going to find out in today's video. Thinking of giving a hard time to Jeff Bezos, or Bill Gates, or Warren Buffett, or Francois Mayers and the richest man or woman in the world's list? Hello and welcome to our channel. Earlier we told you about reducing your taxable income to the least, and in today's video, we will provide you a detailed guide to reduce your tax bill to zero. At the same time, we recognize that paying taxes is our societal responsibility. Yet this is how the rich group plays the game in order to keep major firms running and create additional opportunities in the workforce. When you start doubting your potential of becoming rich, that would be only because you don't know how to reduce your taxes, unlike the other wealthy people who know how to handle taxes. Tax is the biggest and nearly inescapable expense of your income. That's why you gotta get a hold of it. Do you know that you can reduce your tax bill to zero or even more? Sounds impossible and illegal per se, but it's not. So the first step is to like this video so we can move to the next step. First thing that you have to do is to earn the money, of course, and then reduce it to zero. Did you get that? Let's hear it again. To be clear, we are not suggesting of spending the earned money, rather investing it and use it in any other business or real estate property of yours. Or you can avail any tax deductions and credits that you qualify for. Tax laws change regularly, and the rising complexity makes it difficult for high-income earners and those with a high net worth to keep up with the latest tax methods. We are going to give you some pointers so that you understand how is it done. What's your total income per year? No, we're not going to divulge such information to us, just making sure that you know what's your income, unlike how to reduce your taxable income. It's okay, don't feel bad, you are going to earn double the amount of your long-lost income in paying unnecessary taxes. We are going to explain it by a hypothetical situation so that you have a clear idea about it. Let's say you earn $3 million per year. Is it too less or too much according to you? Don't worry, this is a general figure. So from this amount, you pay $100,000 to the states through IRS, Internal Revenue System, and you're left with $2.4 million with you. What? This amount you can't escape. If you wish to stay in the states, you have to pay the states. Oh, that rhymed? Moving ahead. Next step would be paying your employees. If you are a high earner or a ball player or an actor or a singer, you have to pay, let's say, $200,000 to your agent and manager each, making the total of $400,000. This step involves for you to invest that $2 million into real estate or any business as much as possible, and if possible, try to live a less lavish life if you want to live a tax-free life. This invested income gives you reasonable minimum returns of up to $6 million of real estate property, which then can depreciate up to $3 million, which ultimately reduces the tax bill on $2 million of your income that you invested in the real estate or business earlier, up to $1 million in negative, which is carried forward in the upcoming financial year, which works as a credit in addition to your income in the next year. Whoa, it's like investing money pays you to not to pay taxes. It is also called as accelerated depreciation, the knowledge of which gives an upper hand to the wealthy people who use all their income still don't pay taxes. You must also know that investment tax credits are a type of federal tax credit that encourages businesses to invest. Individuals and organizations can deduct a percentage of investment costs from their taxes. These deductions are in addition to standard depreciation allowances. Unlike accelerated depreciation, investment tax credits provide a percentage deduction at the time an asset is purchased. In simple words, you get your earned income reduced to zero, and then earned through investing, which is called as passive income, giving no upper hand to the federal government to charge any taxes. It is the time for you to earn some profit. Now that $2 million of your income invested in real estate gives you about $1 million of passive income in a year. And if you continue on the same pace, you will have another $1 million by the end of year 2, and you will have a total of $5 to $6 million worth real estate that should be appreciating in value with the passive income of $1 million per year. Can you guess the amount that you could earn as a passive income in 5 or 10 years? The figures are insanely too much, which is in addition to your real estate property. This might have clarified your doubt of this process being risky or too good to be true. With the end of 10 years, you will have $20 million worth of real estate property, excluding your passive income. Believe it or not, nearly 60% of the United States population did not pay the federal taxes in the year 2020. You might not have forever to earn, so this is the high time you start investing. These high earners don't even pay themselves even $1, but they know how to reduce taxes and earn more. Do you know how wealthy people buy assets? They earn a certain income because of their talent or expertise, and they don't buy expensive things just to show off. Rather, they buy business and invest in real properties with that money, which then wears off your tax bills, ultimately leaving your money in your own hands instead of being paid to the government in the form of taxes as they reinvest their earned income. This reinvestment pays them off with passive income, which again places the earned income in its place, which let these high earners live their normal lives meanwhile, allowing them to buy various appreciating assets from the extra income they earn through investment. This appreciation and depreciation is closely connected to our lives. You see where your talent and capacity to work hard is depreciating by the years. Your assets and passive income appreciates if you invest or use such strategies every year. Now, when you have these assets, what you can do to earn more is to borrow. Not sell, but borrow against your real property from the bank. When you borrow, you still own the real property and earn money, which will be a non-taxable amount, and you can do this every decade or so. And when we talk in terms of figures, let's say you have real property worth $50 million, and you borrow money against that amount. You get $20 million, which is $70 million, and you still have the property. Every 10 years, the amount increases. Charitable contributions. Some of the other ways of reducing your tax bill to zero is contributing to charitable institutions. There are a variety of ways that can help you maximize your charitable contributions while lowering your tax bill. To maximize tax deductions, high-income individuals could donate low-cost basis stock, contribute to a donor-advised fund, or stack future philanthropic donations in a single year. Minimizing losses and maximizing equity exposures. When it comes to sell, the wealthy prefer to invest in stocks since the tax rates are often lower than those on wage income, assuming the equity was held for more than a year. They also have the financial means to take higher risks, managing gains and assessing equities exposure. Creating a structure, such as a limited liability corporation or LLC, to manage numerous investments is one approach to save on taxes. It could be a collection of assets, real estate, or company. Well, this is it. This is how you do it. If you're a person who wishes to become a millionaire, then this is the guide to your success, which enlists ideas and steps to which, if you follow, will take you to the amazing triumphs of life. If you forgot to follow the first step of this guide, then it is not a problem. Everybody needs a revision, so if you liked our video, then please give a thumbs up below. And if you need information regarding specific rules of tax and or tax legislations of specific country, then please mention it in the comment section, and we will make a video on it too.